Good afternoon, everyone, and welcome to Stock Market Today. It's Alexis Garcia and Justin Nielsen here to break down the market action in today's session for Monday, December 18th. And Justin, I usually like to save my Star Wars references for Ed, but FANG Stocks strike back today in a nice session for the market.
Yeah, you caught that reference, huh? Yeah, so it definitely was a little bit back to the Megacaps today. So we'll talk a little bit about that, and why not focus on those? We can go ahead and talk about Meta Platforms, which of course is the F in FANG for Facebook, Amazon.com, and Netflix. So I guess maybe a fan day.
Fan, yeah. What better day to have a fan day? We'll get to those three stocks, but first, let's check on those major indexes, starting with the NASDAQ closing up about 0.6%. The S&P 500 also up about 0.5%. The Dow essentially closing flat today, as well as the Russell 2000 closing up fractionally higher today. So Justin, let's get into it, taking a look at the NASDAQ, and really nice to see it holding gains from last week, really powering above those July highs.
Yeah, I mean, we really had these highs back here in July that we paused exactly kind of where I wanted to see it pause. We came up to those July highs after a really strong November that started with that November 1st follow through day, but off the bottom of October 26th. And this pause here, very normal action. And we've really been running. Now, the problem that we're facing right now is that we are dealing with an extended market. One thing I will mention is that the Russell 2000, it's nice that it had this participation more recently, especially after the Fed kind of took a more dovish posture. But what's notable here is that we do have this level of 2000. And look, this level of 2000 goes back a ways. You can go all the way back here to 2022, where this seems to be a level of importance. And we hit our head right there and backed away. So it did seem like there was a little bit more breadth broadening out. The mega caps were a little bit out of favor for a moment, but today we kind of saw it come right back. A couple other things I just want to mention. As far as the S&P 500, that was also, as you mentioned, up 0.5%, a good amount. But when you look at RSP, which is the equal weighted S&P 500, this is by Invesco, that was actually down for the day. So whenever we see that divergence between the equal weighted ETFs like RSP or QQEW that represents the NASDAQ 100, that was only up 0.2 tenths of a percent. So whenever you see that kind of divergence, it does kind of let you know, hey, the mega caps are a little bit more in favor today, as opposed to what we were seeing previously, where it was the mega caps taking a little bit of a break and everything else that was looking a lot stronger.
Yes, and you anticipated one of my questions. I know you've been talking a lot, especially on IBD Live, about how extended things are looking. And, for traders out there, what are you looking at to gauge whether or not this is a pause, a pullback, things could move higher? What are some things to keep in mind?
Well, I mean, certainly one of the things you can do is you can be looking at the moving averages. So, coming back to the NASDAQ composite, a lot of times we use this green line, which is the 21-day exponential moving average, as kind of a guardrail. So far, we've been actually trending above this guardrail of the 21-day line for 30 days now, over 30 days on the NASDAQ composite, which the last time we did that, well, guess what? That was back here in July. The time before, you have to go all the way back to 2021, the top back here, because we really didn't have that kind of trending above the 21-day line throughout all of 2022 and the beginning part of 2023. So, the fact that we're staying above that line, I think, is a nice guardrail. But after so many days up in a row, again, you just have to expect that a pause will happen. And that isn't necessarily a bad thing, because it can create new opportunities.
Great. And let's just look quickly in on the Dow, because again, that index also holding above record highs for the moment. Anything to add for this action that we're seeing in the Dow?
Well, here again, the Dow is comprised of the larger cap companies now, whereas tech has gotten a lot of the big headlines. The Dow Jones Industrial Average, as you mentioned, I mean, this is the first one to get to new high territory. The S&P 500 and the Nasdaq, of course, are right there. The S&P 500, not too far off that that high back in 2021, and the Nasdaq Composite the same. The one that has the most room to grow really is the Russell 2000. That's still, quite a ways off of its high from back here in 2021.
Wonderful. Well, let's check in on some sectors, starting with SMH. That's the VanEck Semiconductor ETF. Had a great week last week with a move of over 7%, slightly down today. What is that action there that you're seeing?
Look, after you go up that much, you deserve a break, and so I don't look at this as being anything other than that. You look at the daily chart, and that was such a strong move, and the fact that it's retaining the bulk of those gains, that's what I think is the big thing here. If this were to give up everything over the next few days, that would have me a little concerned. But again, when you look at the weekly chart and you take that step back and you see how we're still in the top part of that range from last week, it just makes me a lot less concerned about today's action.
All right, well, let's check on in with software, IGV. And again, up slightly today, 0.8%, and just kind of merrily rolling along that 10-day line.
Yeah, and you got to remember with these, a lot of big cap names are in them, and kind of the ones that are the most important. I mean, you've got Adobe in here, you've got Microsoft and IGV, and so on. And look, this is well extended above what you would consider this flat base breakout that it had back in November. Mid-November. So yes, we are extended, and even if you take it from here, we've only had one down week this entire time from the October bottom. So yes, it's extended. It's still powering higher. So again, ideally, I think what we could look for here is a pause at this level. And if we could get a pause in a lot of these stocks, that could give us new opportunities for things that are maybe breaking out of either flat bases if the pause is long enough, like 5 weeks or so, or at the very least, some 3 weeks tight action. Beyond that, you're starting to get into having to get a little cute, right? Where you start getting into, oh, this is a little bit of a shelf, or looking at the intraday chart, the 30-minute chart or the 60-minute chart, I can see a cup with handle. So that it's just a matter of how much time we put in here. A lot of people are looking for the end of the year, could be a big rally, and then maybe that pause doesn't really come until January, as people kind of alter their portfolios based on what they were doing for tax purposes. So I think you have to really be willing to hold a few scenarios in mind. We know that we're extended at this point, but that does not mean that we can't go higher. So I think you have to be ready for both. The possibility that we can go higher from here, so you don't want to be too far removed from your exposure, but you also have to have kind of one eye towards those exit doors, because if we do get a pullback, and if you certainly don't want to be chasing things here, because then a normal pullback can really put you out of position for the future.
Right. And that's something I feel like Bill O'Neill always really stressed, getting that market feedback, taking it one day at a time, and being ready to be nimble as you get that information.
Yeah, the market feedback is so critical, because as strong as the indexes have been this year, you might not have been seeing that in your portfolio unless you were loaded up on the Magnificent Seven. So you have to be looking at not just the feedback of what's happening in the market, the indexes, but what's happening in your own portfolio and with your individual stocks, because not all stocks are created equal. You're going to be getting some feedback from the market that some stocks are working, in which case you can add to those, but you're also going to get some feedback that some stocks aren't working. They're out of favor. Doesn't mean that they're bad stocks or bad companies. It just means that your timing might be off. And so you have to make adjustments accordingly, because risk management, of course, is job number one if you're going to be trading in the market. And so you can never lose sight of that.
All right. Well, speaking about a group of stocks that were working today, let's take a look at the Communication Services Select ETF. That's XLC. That was up about 1% today. And Justin, what does it mean then that we're seeing this sector kind of performing well, really, since finding recent support at the 50-day line?
Well, the truth is, with a lot of these sector spider funds, and I look at all 11 of them, I think it gives you a good gauge of where the strength is. And XLC was the strongest today, but you have to remember that a lot of these sector spider funds are dominated by a couple stocks. In the case of XLC, what's dominating it? Meta, which we're going to get to in a little bit, and also Alphabet. So Google, GOOGL. And remember, there's two classes of shares here. So there's also GOOG. So you look at these, and these were kind of the dominant. They make up about 40% of the weight of XLC. So as these stocks go, so goes XLC. So you have to be very aware of how that dominance can play out in these sector spider funds.
All right, I know you had one more you wanted to look at here, FNGS, again, the microsectors FANG plus ETN. As we've been talking about, FANG's moving higher today, this one up about 1.6% today. What is this chart telling you?
Well, basically, FNGS is the FANG stocks, right? And so when you say FANG, the old, this was something that Bob Lang came up with. Bob Lang is actually a friend of Ken Shreve's, our reporter. He was on, talking with Jim Cramer and talked about the FANG stocks being Facebook, Amazon, Netflix, and Google. Of course, we've had some name changes since that time that he came up with the moniker. But, this is kind of giving you a sense of what's happening with those mega cap companies. And because these have gotten so dominant in the NASDAQ composite in terms of their weights, the NASDAQ 100 and even the S&P 500, it's important to kind of understand when they're dominating the conversation for any given day. And that's certainly what we saw today. So when you consider where we were at in terms of the NASDAQ composite, as you mentioned at the start of the show, up 0.6, you look at FNGS, and that was up 1.6%. So a big difference there. That the the FANG stocks were really dominating the conversation. So everything else was just kind of dragging it down. So it's just important to kind of recognize when those divergences occur.
All right, well, speaking of FANG stocks, let's get to Meta. That also had a great gain today, 2.9%, after getting some recent support here at that 50-day line.
Yes, exactly. The 50-day moving average line is something that we look at as a place for a logical area of support. This is something that a lot of institutions look at as well. And it's nice that this 50-day support really kind of came right here, not too far into this base. So it was a nice area to get that support at. And we did pop above it. So if you had gone with like a little bit of a short-term downtrend line, you could have maybe gotten an early entry and then one more test of that 50-day moving average line. But we're also kind of, if you kind of look at this area here, again, and this is getting a little cute, right? This is a little bit of a 3-week consolidation that we had, and we just popped out of there. So again, you can argue that this is maybe a place where you could start a position, or you could even add to a position if you had something on this stock before. Maybe you were buying it off the 50-day moving average line, and now that it's crossing this 342.92 area, you can maybe add a little bit if you started it a little small off that bounce. But again, you have to keep in mind that a lot of these stocks are extended. While this was taking a little bit of a break, and you can see that in with the relative strength line, that it was taking a little bit of a break while the market was moving so strong. This is not as extended in terms of as a stock than a lot of other things. So that's one of the things that makes it a little bit more attractive today. But again, you have to look at the market as a whole and where does this fit in your portfolio? Because if you're already filled up with a lot of other names, maybe you don't have room for a name like this.
All right, well, let's take a look at Amazon, AMZN. Another nice gainer today, up 2.7%. And, as we're talking about actionable maybe today, but again, this problem with a lot of leading names being extended.
Yeah, and so this looks like a little bit of a longer consolidation than what Meta had. It kept on kind of trying to pop into new highs, but this was like the definite big move to new highs. But look, you take a look at the weekly chart here. This is working on the ninth week up in a row. That's a lot of action. Now, I will say that this 3 weeks tight area is that kind of consolidation that we saw. So you at least had kind of a tight area. And when I say tight area, I'm usually referring to the closes. So every Friday, it seemed like that's where, as the institutions were getting ready to leave for the weekend, they were saying, hey, I'm comfortable buying shares up until this point. And so you can kind of see how it really kind of kept on closing in the same area all of those Fridays, and that builds that 3 weeks tight area. So we've kind of popped out of there, and the fact that that 3 weeks tight formed right at the highs here is kind of nice. It was that little bit of a pause, not much of one, but again, you have to put in the perspective. This is now in its ninth week up. So it's actionable, but you have to be careful at the same time.
Great. Well, let's wrap up by taking a look at Netflix. Uh, Also breaking out today with a 3% move. What are you seeing here, Justin?
Well, this is a little bit more of that traditional cup with handle look. What Netflix did was it came down. It wasn't too bad of a correction, 29%. So not out of the ordinary for a growth stock to correct. And what it did was it came right up to that previous high at 485, and that's where it paused. So when you take a step back and look at the weekly chart, it's kind of like this area of a pullback, a little handle, and that's exactly what you kind of want to see, right? A little pause at that previous area, and now it's trying to attack those July highs with some more gusto, and we'll just see if this works out. If it can continue up higher here, today could be a good entry. You could have also looked at this as a downtrend where you could have been adding maybe a little bit earlier. And I should mention that I do have a position in this stock. One of them is a position that my wife had from a long time ago, where she wanted a single share because she just wanted to prove a point, and she won that argument.
Well, I hope she proved it.
Yes, she proved it. Netflix went up, but this is giving another opportunity to add shares, and it is kind of coming from that more traditional cup with handle look.
All right. Well, thank you so much, Justin. And that's it for today. We'll be back with more market analysis tomorrow morning, starting with IBD Live. You can head on over to investors.com/IBD Live for all the details there. And we'll see you right back here after the close tomorrow.